Brother is one turn off. Turn on your camera. Mic, please.
On.
Please.
Should we start?
Yes, we are live now.
Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Nabiyyana Muhammadin wa ala alihi wa sahbihi ajma'een. Rabbi shrah li sadri wa yassir li amri wa ahlul 'uqdatam min lisani yafqahu qawli. Excellencies, friends, industry colleagues, Assalamu alaikum wa rahmatullahi wa barakatuh. I hope you and your family are keeping well during these globally challenging times, inshallah. As we are entering the last 10 days of Ramadan, let me wish you Ramadan Kareem with the hope that all our prayers, fasts, charities, and du'as are accepted during this blessed month. Ameen. My name is Ridwan Malik, and I am a senior manager here at Aaoifi. On behalf of Accounting and Auditing Organization for Islamic Financial Institutions, the organizer of this forum, its board of trustees, its technical board, its secretariat, and after our partners of this forum, Islamic Research and Training Institute, College of Banking and Financial Studies in Oman, and Minhaj University from Pakistan, it gives me an immense pleasure to welcome you all to this first of its kind of Islamic Finance Virtual Forum, which is delivered on COVID-19 economic implications, Islamic finance, and the way forward. We are glad to receive the institution's support from some of the well-established and well-respected institutions within the Islamic finance industry. In addition, we have been overwhelmed with the attendees registration, which has gone past 2,500 from around the world. We never thought of an event of such scale with such a diverse and global audience. Alhamdulillah. We hope that it becomes a trend-setting event, and discussions here today steer us towards developing a robust financial industry, a robust Islamic financial industry in the post-COVID world, inshallah. Before we begin the formal proceedings of the day, let us start with the words of the Creator. And for that, I would like to invite our brother, Dr. Abdurrahman Al-Saadi, to recite few verses from the Holy Quran.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل لمن ما في السماوات والأرض قل لله كتب على نفسه الرحمة ليجمعنكم إلى يوم القيامة لا ريب فيه الذين خسروا أنفسهم فهم لا يؤمنون وله ما سكن في الليل والنهار وهو السميع العليم قل أغير الله أتخذ وليا فاطر السماوات والأرض وهو يطعم ولا يطعم قل إني أمرت أن أكون أول من أسلم ولا تكونن من المشركين قل إني أخاف إن عصيت ربي عذاب يوم عظيم من يصرف عنه يومئذ فقد رحمه وذلك الفوز المبين وإن يمسسك الله بضر فلا كاشف له إلا هو وإن يمسسك بخير فهو على كل شيء قدير وهو القاهر فوق عباده وهو الحكيم الخبير صدق الله العظيم.
Jazakallah khair, Brother Dr. Abdurrahman Al-Saadi. Distinguished guests, colleagues, and friends, the world around us has changed in no time. Little did we know as we welcome the year 2020 that only the first quarter of the year is going to change the world like it has. And none of us, of course, planned for it as we drew our business plan for the year 2020. As you are well aware, the impact of the virus has been far and wide, where it has disturbed the normal course of life by bringing countries to halt their operations, enforce lockdowns, impose curfews, disrupt global supply chains, and limit mobility of people in general. All of this together impacted the financial markets, which has shown loss of confidence, leading to plunge in the global stock indices. Islamic economics, banking, and finance, as part of the overall economic system, is no exception. The aim of this event is to deliberate on the economic impacts of COVID-19 on Islamic finance and further reassess the potential of Islamic finance through its risk-sharing principles during these unprecedented times. Deliberate on the growing role of Islamic social finance instruments and solutions it offers while leveraging on financial technology. We are, alhamdulillah, glad to have more than 20 speakers who will share their expert opinions in the next 4 hours on these topics. We are thankful for their attendance and sparing time to be with us to share their opinions, views, and expertise on the subject matters. The course of the morning will be as follows. There will be a welcome address followed by 2 keynote speeches, a first panel discussion followed by a special address, and 2 panel discussions in the later part of the morning and early part of the afternoon. Panelists will be allocated a designated time to speak, while the last 10 to 15 minutes will be for question answers. The attendees are requested to send in their question answers via the Q&A tab at the bottom of the screen, stating who it is addressed to from the panel. The moderator will then direct the selected questions to the panelists. Please note, we will also run 3 polls during each session, which will pop up on your screens during each session. Now, to formally welcome you all, let me have the pleasure of welcoming the Secretary General of Aaoifi, Mr. Umar Mustafa Ansari. Brother Umar, the stage is yours.
Assalamu alaikum wa rahmatullahi wa barakatuhu. A'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Alhamdulillahi Rabbil Alameen, wassalatu wassalamu ala ashrafil mursaleen, Nabiyyina Muhammad wa ala alihi wa ashabihi ajma'in. Distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuhu, and very good morning to all of you. On behalf of Aaoifi and our partners, I would like to welcome you all to this very important event in these times. At the outset, I would like to thank all our main collaborators, CBFS Oman, Minhaj University, IRTI, IDB, and in addition to that, I would like to thank all the partners who are here. In particular, I would like to thank it's a galaxy of stars, alhamdulillah, that we are able to collect here. Very distinguished speakers from all around the globe, representing very important organizations, possessing enormous amount of knowledge that we would like to share from them today on these very important topics related to this pandemic in this particular circumstances. I would not take too much time, but I would like to touch upon just a few quick things. These times are difficult, and these are not only difficult because we are facing a pandemic and because we are facing an economic effect of that pandemic. Rather, these are more difficult because of uncertainty. Nobody knows what to do at the government level, at the health department level. Still, everything is in trial and error. And those trials and errors have created a significant amount of uncertainty, which might be more disturbing and distracting from the objectives that we may have at this point of time, individually, collectively, as a country, as an organization. Whatever we have in mind, this is all gone. Whatever we had in our plans, in our targets, in our whatever we wanted to achieve, everything right now is, I would say, in a deep layer of fog, hidden behind us. And this reminds us of somebody superior to the mankind, Allah Almighty, who created this world and who tests us by giving these situations. And this is a test that we need to pass. With regard to the pandemic, we are very much feeling sorry about those who are being affected directly, their families, the loved ones, individuals who are affected, who are facing the difficulty, and those who are their family members and their loved ones who are facing a problem because of that. But this is not sufficient. The impact of the pandemic has gone by far beyond that. I would honestly say the economic effects are by far bigger. And the after effects of this might be much, much, much bigger. And we need to prepare for that. And this is one of the reasons that we believe that Islamic finance has to play a role. I would like to mention one thing, that if you go for the analysis of 1918 to 20 Spanish flu, you will see that the economic realities of the world were changed. The countries which were stronger earlier to that became weaker. The countries which were weaker, they became economically stronger. There were more and more women in the workforce. The average per piece wages and average weekly wages went up in most of the countries. There were so many factors behind that. We can agree that there was World War I also, but we need to understand that these sort of pandemics change the face of life. And we are going to face a change in the face of life, whatever is in front of us. Obviously, we are seeing some of the changes are already coming in. We are having a huge conference, alhamdulillah, today by video streaming, which might not be possible earlier. In this particular situation, when we know that the world is changing, what Islamic finance needs to do? What is our main issue? Obviously, I'm not here to discuss it all, and we are here to learn from the distinguished speakers on that. But I would like to touch upon a few things only very quickly. That Islamic finance needs to demonstrate that it is resilient. This is very important. 2008 crisis saw that Islamic finance was much more resilient as compared to other segments of finance. But we need to prove it now. We are much bigger now. At that time, Islamic finance was much smaller. Now you have much bigger challenge. The sustainability has to be there, not only for yourself, but when we talk about sustainability, it has to be about your customers as well, about your employees as well, all the stakeholders around you. You have to prove that you are risk averse. And it's not only that you face this situation, then you are going to do something, but rather you were better equipped on the risk side. And if you were not, God forbid, then you will fail. But in addition to these things, I would say that there is one biggest challenge for Islamic finance as of now is to show its values and ethics. You know, the values and ethics of a person are best known when the situation is of distress. When everything is going good, you can find a person to be very much ethical, having all the values, upholding all the values. But once in distress, this is the time when you see how good the person is in the ethics and values. And I believe that Islamic finance is not only about compliance with Sharia principles, it's also about the values and ethics. And we need to make sure that values and ethics as envisaged in Islam, as being part of our fundamentals, are being followed by our institution in a manner that we can show to the world and demonstrate to the world that we are the carriers and torchbearers of the final message of Allah, and we are the ones who can show to the world the difference which is there. I would just like to update you on a few quick things. Alhamdulillah, today we are signing an MOU with UNHCR, United Nations High Commission for Refugees, and we are thankful for Brother Khalid Khalifa to be part of today's discussions. The idea of the MOU is that through Aaoifi, UNHCR would like to initiate some of the new ideas with regard to the sustainability of the Islamic communities who are in refugee state, and which includes the charitable part, but we believe that it should include the microfinance and other aspects as well to bring them to normal state of life. We are very much thankful to them, and we hope that this will be a good initiative with the two organizations, but also for Islamic finance at large, and also for our Muslim communities who are in a state of need. In addition, I would just like to quickly update you about what Aaoifi is doing recently. At Aaoifi, we have tried our level best that our routine functioning is not disturbed. So more recently, we have reformed our technical boards. The process was going since middle of last year. Now we are towards completion of that process, and we believe that this process will, the result of this process as a formation of new boards will result in further improvement of our standards and the whole process of standard setting, inshallah. The first meetings of the boards were held, and now all the working groups are formed for the new plan, according to the new plan for next 4 years. And the things are, alhamdulillah, moving in the right direction. We have almost completed our footprint analysis with regard to the state of adoption of Aaoifi standards in different parts of the world. And that is just on a final review stage. Inshallah, shortly we will be publishing it and sharing it with you. In particular, we have worked on the response to the market needs in these times. More recently, we just developed an exposure draft of accounting issues statement from the Aaoifi Accounting Board. We will be holding shortly a private event, a limited seats event on discussion for that exposure draft. And we have already requested some very important stakeholders to respond on that. And shortly, we will be issuing the final one. On the governance board, also, we started this initiative, and the first meeting is held, and shortly we will be coming up with the response on these needs. On the Sharia side, we are considering, we believe that there are some Sharia issues that need to be handled. So we will be shortly coming up with that. But more recently, we have collaborated with Central Bank of UAE for a combined event of central Sharia boards of different countries. And we will be taking major issues to our Sharia board, inshallah, as well. In the end, obviously, I will not take would like to take more time. You are here to listen to so many senior distinguished speakers, so I would like to take your leave. In the end, I would like to again thank all the collaborators, all the partners. Particularly, I would like to thank our brother Mughis Shaukat from CBS FES Oman and our brother Rizwan Malik from Aaoifi. All of the team members have worked hard, but these two have worked very hard, enormously hard to show a different type of event. Alhamdulillah, the level of registration, the level of participation of the speakers is great. And we hope that inshallah in future also we'll be able to hold events like that. And I would like to thank again and show our appreciation to the partners who have collaborated for this event. And I would like to thank all the participants for being here. Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much, Brother Umar, for a very warm welcome and setting the tone of the event. Now, before any further ado, let me introduce you to the two keynote speakers, both of whom unfortunately were unable to attend live event with us due to unforeseen circumstances and had sent in their exclusive video speeches to this forum. First, let me introduce the Honorable Retired Justice Mufti Taqi Usmani, Chairman of Aaoifi Sharia Board, who will deliver his keynote speech through a recorded video for this event, which we are about to play for you.
Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala Sayyidina Maulana Muhammadin Khatamin Nabiyyin wa Imamil Mursaleen wa ala alihi wa ashabihi ajma'in wa ala kulli man tabi'ahum bi ihsan ila yawmiddin. Amma ba'd. Honorable Chairman and the distinguished participants of this August Forum, Assalamu alaikum wa rahmatullahi wa barakatuh. I am extremely grateful to Aaoifi and co-organizers of this timely conference that aims at discussing economic and financial issues raised by COVID-19. It is a demonstration of Allah's infinite power that an invisible and lifeless creature has encircled the entire world with fear and fever and made the so-called superpowers of the world to bow down and to close all their activities of pride. No science or technology is coming to their help, and they are trying to fight this invisible tiny creature by whims and conjectures only. The most horrible effect of the pandemic is foreseen on the world economy, with decreasing prices, declining growth rate, increasing unemployment, acceleration of gold prices, and the shortfall of stock and commodity markets are going to create a crisis in which the people will probably forget the crisis of 1929 and the financial crisis of 2008. It is guessed that after COVID-19, the outlook of our present life may change altogether. Perhaps the world will have to review its long-established dogmas and think to readdress the basic economic issues and reshape its commercial system It is interest that may be called the mother of all financial evils. Islam has prescribed an interest-free system based on real assets in which all stakeholders share the rewards and risks of the commercial activities, where money is only a medium of exchange and not the object of speculative trade itself. This is the only way to avoid financial crisis and to come to a self-resistant economy. Islamic financial institutions were expected to bring change in this scenario, and they tried to some extent to restrict their operations to asset-based transactions. But their competition with conventional markets forced them to remain within certain boundaries set by the prevailing financial system without bringing. When we speak of ways and means to solve the economic problems faced by the entire world, this point must be studied deeply. And I request this August forum that along with addressing the urgent issues, they should chalk out a roadmap for undertaking this job competently and bring a way out to reconstitute our economy on that basis. May Allah Ta'ala bless us all with His full support to put an end to the war raised against him and his messenger Sallallahu Alaihi Wasallam in the shape of interest-based financial system. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Jazakallah khair. I would like to thank the Honorable Retired Justice Mufti Taqi Usmani, the Sharia Board, Chairman of the Sharia Board of Aaoifi, for sending in the recorded speech well in time for it to be played. I believe his message was loud and clear and pertinent, which was that the current pandemic is offering us a golden opportunity to move away from a system based on riba and its repercussions on the economy in general. This basically calls for Islamic finance industry to go back to its roots and the drawing boards. Let us now move to the second keynote speech of the day by His Excellency Sheikh Ibrahim bin Khalifa Al Khalifa, Chairman of Aaoifi Board of Trustees.
Bismillah ar-Rahman ar-Rahim. Alhamdulillah wa salatu wa salamu ala Rasulullah wa ala alihi wa sahbihi wa walahu wa ba'd. حيث أن لغة المؤتمر هي اللغة الإنجليزية كما أخبرت، فإنني سوف أضطر للكلام باللغة الإنجليزية وأبدأ الحقيقة بالترحيب بكم. Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullah. Well, good morning to you all. On behalf of Accounting and Auditing Organization of Islamic Financial Institutions, Aaoifi, it is indeed my pleasure to welcome you all to the virtual forum on pressing topics, which is COVID-19, economic implication, Islamic finance, and the way forward. I would like to thank you all, the dignitaries, the speakers, the supporters, and the attendees for their cooperation in making this event possible in less than 4 weeks' time. Through this web-based forum, we aim to provide an opportunity for Islamic finance stakeholders to explore and discuss ways and means to help reduce the impact of the pandemic coronavirus, COVID-19, on Islamic finance through its risk-sharing principle using Islamic social finance tools and the financial technology, fintech. I am personally very keen to listen to what this expert have to say. In the meanwhile, allow me the opportunity to briefly share my own thoughts on the topic with you. Excellencies, ladies and gentlemen, the pandemic COVID-19, which started in December 2019, has literally brought the whole world to a standstill. Although the epicenter of the outbreak was initially in China, it has now shifted to Europe and America, as more than 185 countries have reported cases of pandemic coronavirus, resulting in more than hundreds of thousands of deaths and millions being infected globally. The impact of the pandemic on the global economy are unprecedented. It has resulted in the contraction of global GDP, increased unemployment, and overall a loss of the humanity in general. As a result, the impact of COVID-19 has forced policymakers around the world to take prompt action by providing economic stimulus package by way of physical monetary interventions. Ladies and gentlemen, the Islamic economics, banking and finance is no exception, as the market participants are coming to terms to understand the economic implication of COVID-19. Multilateral institutions like the Islamic Development Bank has launched an aid package, while Islamic bank and financial institutions have introduced precautionary measures and provided reliefs to the creditors in line with the government guidelines. This has also raised some challenges for Islamic banks and financial institutions related to regulatory guidelines, liquidity management, lack of clarity on the impairment treatment, increase in non-performing financing, and thus an overall impact on the profitability. Your Excellencies, ladies and gentlemen, the slowdown in economic productivity, it is affordable to us as a remarkable opportunity to recast the economic and financial system into smoothing different, something that serves the may, not the few. Our collective imagination can surely take the beautiful principle of Islam to forge a more equitable model of an economy. We want to strive for an economic model that is based on sharing risk and sharing the opportunities, rewards, a system that reduces volume born from charging interest, a system that does not exploit the weak in society whose bargaining power is significant, a system not based on financial products that have a weak connection to real economy, a system that discourages excessive speculation to gain endless profit, instead encourages its agents to work for a common goal, a system that places equitable outcome and benefit for all. Islamic finance sector in this difficult time must play its due role for providing road for such ideal system. Your Excellencies, ladies and gentlemen, it is expected that the default rate of the Islamic finance customer will go up. Hence, it is important for Islamic financial institutions to emphasize with their client in coming up with an optimum solution, which provide payment moratorium, discount and waivers, relax working capital and financing terms to ensure continuity of business in these extraordinary times, as advocated by the Sharia principle and are the value system of Islam. I have always personally opposed the idea of harsh civil and criminal action against defaults, and I believe this is a high time to promote these values, and Islamic finance shall be the leader in this respect. In addition, Islamic banks in various countries can set up a joint fund through their respective customer social responsibility budget to support people and sector affected by this pandemic coronavirus. This may include support to the families of the sick and the deceased. The fund may also use to boost the healthcare services by way of increasing hospital capacity, such as hospital beds, ventilator, and medical staff, in order to cushion the determined impact of the pandemic. Furthermore, the enhanced role of zakat and waqf cannot be undermined in these challenging times. Your Excellencies, ladies and gentlemen, and I would urge that this all should be initially local, but should go beyond borders, as it is a global issue and some countries might be in more need than others. I further believe that the rehabilitation after these times would also need an important role for Islamic finance, particularly through micro, small, medium-sized enterprise finance under Islamic models. Your Excellency, ladies and gentlemen, I have no doubt that the post-COVID-19, the world will be different in many ways. One of them is through the increased use of technology. Banks are encouraged customers to move from visiting branches to digital banking. I truly believe that the fintech can be used to leapfrog the current times and can be used effectively in promoting an adoption of risk-sharing model of Islamic finance and in the different deployment of philanthropic and endowment funds. Excellencies, ladies and gentlemen, before I conclude my speech, I would like to take this opportunity to inform you that while facing these challenges, we at Aaoifi are on our forefront, full enthusiasm and commitment. Our technical board, working groups, and subcommittees meetings are being held as scheduled as using the web-based tools. The capacity building program are all on track and examination being conducted online and in line with the government healthcare guidelines. And our advocacy and awareness program, those slightly impacted, continue to provide the platform where we develop the infrastructure for the global finance industry. We also committed to organize our two international conferences, Sharia Board Conference and Aaoifi ISPD World Bank Conference in the fourth quarter of the year, inshallah, hoping that the situation gets better by that time. In addition, two important initiatives and activities of Aaoifi that I would like to bring to your kind attention are, number one, Aaoifi Accounting Board has set up a COVID-19 response task force. The mandate of the task force is to monitor and provide guidance on the accounting impact and response to economic effect COVID-19. The second is Aaoifi is the final stage of publishing its footprint analysis report, which provide a detailed analysis on countries and jurisdictions where Aaoifi standards are followed. In the end, I would like to thank the Board of Trustees, our technical board members, subcommittee members, our institutional members, and various stakeholders for their support of Aaoifi and its initiative. Thank you for patiently listening to me. I wish you a fruitful discussion during the next 3 hours and look forward to addressing to you again soon, inshallah. وخالص تمنياتي لكم بصياما مقبولا وتقبل الله منكم الطاعات وجعلكم العتقاء هذا الشهر الكريم. والسلام عليكم ورحمة الله وبركاته.
I, on behalf of all the participants, would like to thank Sheikh Ibrahim bin Khalifa Al Khalifa, Chairman of Aaoifi Board of Trustees, for sharing the keynote speech. My understanding of it is that in addition to the new economic system that retired Justice Mufti Usmani addressed as well, His Excellency advised Islamic banks to be empathetic in these difficult times with their clients in working out an optimum solution in line with the Sharia guidelines. Furthermore, His Excellency advised banks at national level to set up or to route their CSR activities in light of the people affected by the pandemic by setting up a joint fund at a national level. Excellencies, friends, and industry colleagues, before I introduce the first panel session, let me inform you that shortly during the panel discussion, a poll question will pop up on your screen. You will have at least 1 hour to reply. You may do so immediately or after listening to the experts. The results of the polls will be announced at the end of the session. Now, to introduce the first panel, which is on reassessing the potential of Islamic finance to provide economic panaceas in and post-COVID-19. We are glad to have some of the well-known leaders and experts in Islamic finance industry with us here to share their views.
Start video.
To chair the session, let me invite a veteran in Islamic economics, banking and finance, Professor Humayun Dar, Director General at Cambridge Institute of Islamic Finance in the UK, who will then introduce his fellow panelists. Professor Humayun, the stage is yours.
السلام عليكم ورحمة الله وبركاته. الحمد لله رب العالمين والصلاة والسلام على سيدنا محمد وعلى آله وأهله وصحبه أجمعين. Ladies and gentlemen, it is a great pleasure and honor for me to chair this session, which has some of the finest brains in the global Islamic financial services industry. In these hard times, COVID-19 has affected everyone. It has affected everything and everyone, including financial services industry, of which Islamic banking and finance is a part. This session, session number 1, which is on reassessing the potential of Islamic finance to provide economic panaceas in and post COVID-19, we would be discussing quite a number of issues. But before that, let me share my own couple of views on this reassessment. I recall a bout involving Mike Tyson and someone else, I don't remember his name. The other person, the opponent in that bout, was going around on all the TV channels saying that he has a plan to knock down Mike Tyson. And the media was asking Mike Tyson, what is your plan? And he wouldn't say anything about it. On one channel, at the end, he said that he doesn't have a plan. But one thing is for sure, that he is going to hit his opponent very hard on the head. And once he gets hit, he would forget his plan. COVID-19 has actually done exactly the same thing to us. It has hit us so hard that right now we are not in a position to come up with a plan. We can, however, look back and see what we have done so far and what we can do in the short run. Short run means hopefully this time period in which COVID-19 is directly relevant to our lives and the post time when hopefully, inshallah, the crisis goes away. Islamic banking and finance has seen quite a number of crises in its short history of about 50, 60 years. And it has come up with its own responses to different challenges. COVID-19 has challenged everything in the world. Islamic banking and finance is thankfully not the only affected by COVID-19, and hence the response Islamic banking and finance comes up with will not be the only response to this COVID-19. Rather, this will be part of a bigger response by the world, by the countries, and by the institutions. To discuss this topic, I have 6 very distinguished leaders in the global Islamic financial services industry. 3 of them represent industry infrastructure building institutions. First of them is Dr. Samia Swalem, who is Acting Director General of Islamic Research and Training Institute, a member of the Islamic Development Bank Group. Our second panelist is Dr. Bello Lawal Danbetta, who is Secretary General of Islamic Financial Services Board, which is a body responsible for developing regulatory framework for Islamic banks and financial institutions. Our third panelist is Mr. Ijlal Ahmed Alvi, who is the CEO of international Islamic financial market in Bahrain. In addition to these three leaders of the industry infrastructure building institutions, we have two very fine practitioners of Islamic banking and finance. Mr. Khalid Al-Qaid is the CEO of the only and standalone Islamic bank in Oman, Bank Nizwa. Our second practitioner panelist is Mr. Shamzani Hussain, who is heading the Islamic banking franchise of Bank Muscat, again in the Sultanate of Oman. Last but not the least is Dr. Mughis Shaukat, who is our technology expert, and he is head of Islamic finance at College of Banking and Financial Studies, again from Muscat in the Sultanate of Oman. Because we have only 75 minutes, and out of those 75 minutes, probably I have consumed 5-7 minutes already. So without further ado, I would like to start this panel by asking my first question to Dr. Sami Aswalan. Before I do so, I would like to encourage you to ask questions, out of which we should be able to pick a couple at the end of the panel session so that our worthy panelists are able to answer those questions. So my first question for Dr. Sami Aswalan. Dr. Sami, despite heavy claims by Islamic banking and finance to offer an alternative system of finance, Islamic banking and finance has not been able to exploit in the past different opportunities to provide credible and workable solutions which could be deemed novel and workable and new ideas to banking and finance. So do you think that COVID-19 would be an exception in such a way that Islamic banking and finance would be able this time to assert itself to become relevant in the global banking and financial services industry? Dr. Sami Aswalan.
Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Salatu wassalamu ala Rasulullah wa ala alihi wa sahbihi wa wala. Thank you, Brother Human Dar, and thanks to Aaoifi for organizing this August virtual meeting. I'm very honored to be participating in this esteemed panel. Did the Islamic finance industry learn the lesson? Did they capitalize on the opportunities? That's a very good question. But to be fair, we should ask the same question to the conventional industry as well. How much did the conventional industry learn from the global financial crisis? Are they now less risky? Are they now less systemic or threat the economy with less systemic risk? And the answer, I think, is that not much. It's almost the same, if not worse. The financial system, the global financial system, did not change much. Now, to be fair to Islamic finance, we should always remember that it is the ideas that make the difference, not the size. It's the power of ideas, not necessarily the power of size. Now, what did Islamic finance make an impact, I think, was reflected in Basel III. Now, if you read Basel III, which was formulated after the global financial crisis, you can see there the elements of Islamic finance sitting there without, of course, calling them Islamic finance. So let me read to you, although I know I have only very few minutes to for my comment. So let me read to you some paragraphs from Basel III. Why did the committee of Basel revise the standard, the banking standard, for a third version? So let me start reading. Quote, to improve the banking sector's ability to absorb shocks, thus reducing the risk of spillover from the financial sector to the real economy. Quote, help ensure that the banking sector serve as a shock absorber instead of transmitter of risk to the financial system and the broader economy. A strong and resilient banking system is the foundation for sustainable economic growth. Now, if you read these statements, you think that you are reading a paper on Islamic finance. Well, it is not an Islamic finance paper. It is Basel III. This is the introductory paragraphs of Basel III. So you can see that there is some impact of Islamic finance on the global economy or the global financial system, although indirectly probably. So it is the power of ideas. To be fair also to Islamic finance, we are seeing more and more innovative ideas coming to the industry through, for example, Awqaf, through fintech, through crowdfunding, that would probably make a greater impact on the future of the industry. So is the industry learning? Well, I would say yes, but it takes time. Does Islamic finance have an impact? Yes, but not the way we think of it. It is not that individual Islamic institutions or financial institutions have an impact. It is the ideas that has an impact at the global level. Thank you.
Thank you very much, Dr. Samir Swellam. I was expecting an excellent answer that you have given in response to my rather provocative question. The summary of your answer is that we might not be able to see a direct impact of Islamic banking and finance in the wider world. However, it is registering its presence by way of spreading the strong ideas on which it is based. This is true. And we are happy that Islamic banking and finance is making progress. And this progress, inshallah, would continue in the future as well. So after our first or introductory question, I would like to go to my colleague, Dr. Bello Lawal Danbetta. As I said, he is the Secretary General of Islamic Financial Services Board. Now, when we look at COVID-19, unlike the global financial crisis of 2008, 2009, everything has been affected this time, putting the global economy into a state of shock. Islamic banks and financial institutions are not an exception. Now, Islamic Financial Services Board has been publishing an annual stability report. So, Dr. Danbetta, what are your views on the relative stability of Islamic banks and financial institutions in the wake of the present crisis? Although we know that the profit loss sharing based products are relatively less and a few in the activities of Islamic banks and financial institutions. Do you think that a better proportion of PLS-based products would have better helped Islamic banks and financial institutions to cope with the present crisis? Dr. Danbetta.
All right. Assalamu alaikum wa rahmatullahi wa barakatuh. And thank you very much, Prof. Humendar, for this excellent presentation of the question. First of all, I would like to thank Aaoifi for the invitation as the organizers of this important forum. Virtually, it is really timely, and I really appreciated the arrangement. Thank you very much, and I'm honored to be part of the panelists. Well, I think before I answer your question, Prof. Humendar, it is important that I really succumb to the point made by Dr. Suhail, and I absolutely agree with his analysis of the potentials of Islamic finance. And talking about the implications of COVID-19, I think we cannot be overemphasized in the sense that even a small child feel the implication of COVID-19 because his freedom of going outside of his home to play on the playground has been taken away from him. So, I mean, this is to the extent that the COVID-19 has impacted all of us. Now, the implication of COVID-19 has not only affected the Islamic financial services industry or the institutions themselves, but it is a situation whereby the governments, the regulators, as well as the market players find themselves in a very difficult balancing act, in the sense that while the government is battling with the battle of how to save, either to save life or to save the economy, the regulators are challenged with the financial stability and its soundness versus the economic sustainability, while the market players are actually struggling between financial sustainability, their individual institutions' financial sustainability, and the retention of talent. So this is to the level that the extent of the dilemma that the global financial system finds itself, which Islamic finance is not immune to this and is part of this system. So what I will say with regard to Islamic finance, it is time for the industry experts to demonstrate the resilience as well as the capabilities and the superiority of Islamic finance by embracing more of new initiatives and structuring new products, not only on profit and loss sharing products, but basically any product that will enhance financial inclusion, as well as bring out the new model of Islamic social finance that's being propagated, and as well as the Islamic social banking and finance model that is being propagated. This is quite essential at this time around, and because we know with the partial lockdown in many countries, small businesses are most hit with this pandemic, in the sense that they have to close their shops, and small, they rely more on financing from banking and other institutions. And now that they cannot operate because of the partial economic lockdown or the total lockdown by many countries, that really puts the banking institution as well as the Islamic financial institutions as well at a risk. Now, at our own end, as you rightly mentioned, IFSB annually issue a financial stability report. And in our financial stability report, we try to make an analysis of all the areas that are going to be potentially affected with regard to any shock or vulnerability or any potential risks that is affecting the industry. At our own end, the IFSB has taken quite a number of initiatives. We have set up our own internal task force endorsed by our technical committee to review all our current ongoing projects, as well as the past one that we have done, to see how we can accommodate the implications of COVID-19 in the Islamic financial services industry. We have as well commenced issues of public statements on the implications of COVID-19, highlighting specific areas that is of relevance to our members, and we try to see how we can be able to provide the correct guidance. We have quite a number of initiatives that we are doing, including the creation of compendium of policies and policy trackers to track the global policies that is being issued in response to COVID-19. Having said that, the one potential area that I would like to highlight, or key potential areas that I would want the regulators as well as the market players to focus, is the potential increase of cyber risk security, the cyber security risks, due to the fact that a lot of people are working from home, and we have been struggling with this. So people will be trying to access their servers, and the financial institutions will be exposed to this kind of new risks as well. There is going to be a potential increase in terms of the risks of creative accounting. Some financial institutions that are not doing well will be able to have a challenge in reflecting their own performance, especially if they know that it's going to affect their market shares prices, then that's another crucial area. We also be very concerned in terms of the regulators not relaxing the prudential requirement related to maybe capital buffers, as well as the provisionings that is being required by financial institutions to make with regard to the classifications as well, the assets, relatively prudential requirement related to disclosures. These are all areas that we are very, very much concerned. At the same time, we also concerned with the way the industry will be able to attend to the consumer borrowers as well as investor protection issues, because we'll soon be having this kind of new areas of challenges to the regulators as well as to the market players. Now, as mentioned by Brother Umar in his opening remarks, welcome remarks, it was an impressive effort made by Aaoifi to come up with the COVID-19 accounting implication. But I think the point that I would like to add here is more on the focus should be given on the IFRS 9 implication, because a lot of guidance has been provided in the IFRS 9, and this is related to the expected credit loss assessments for restructuring of financing, because we have seen quite a number of regulators in many jurisdictions now given opportunity for moratorium for some loans not to be charged any financing or for restructuring of loans and financing instrument for Islamic financial services industry, as well as the conversion of Islamic credit cards into a long-term loans. These are all areas that we believe the assets classifications as well as the provisionings that is being provided, and particularly with regard to the credit risk assessment issues, this is where the Islamic finance areas, regulators need to focus on. So we believe that the profit and loss sharing contracts are part of all these that I have mentioned. And I think we believe that it will give an opportunity for Islamic finance to show its resilience, looking at the implication of COVID-19. But if we look at the balance sheet of the banks now, predominantly is more on the Murabaha side. But I think, which is a good point that Prof. Huminder, that you raised this issue that whether it is time now, it has been propagated, a lot of initiatives has been made to encourage the banks to embrace these profit and loss sharing arrangements to really foster the economic growth. But I think this is now the right time to really have a look at this. But as an international standard setting body, we also have to be concerned with the bank's capabilities in having the right capacity to monitor as well as assess the any profit and loss sharing ventures that they may go into enter into, particularly in areas whereby the banks doesn't have expertise, and particularly with the inherent restrictions of contracts like Musharaka and Mudaraba with regard to the Rabul Mal's intervention into the business. So, for the meantime, this is that I can share, and I hope that there will be more time to discuss a lot, and I hope that we'll be able to come up with something that is very concrete and useful to the industry and as well as to the participants. Thank you, Prof.
Thank you very much, Dr. Bello Zanbetta. In summary, basically, you are saying that profit loss sharing should be only one focus. There are some other important aspects of banking and finance. On a global level, we have been concerned with financial inclusion. We should be asking whether Islamic banking and finance is more inclusive, or at least as inclusive as conventional banking and finance. You have referred to the stability of the financial system overall as well. So are Islamic banks contributing to the stability of financial systems? And of course, being part of the economic system, are they contributing to the stability of economic system as well? And of course, a major focus should be on the social welfare, welfare of the customers and the welfare in the society as a whole. And you rightly mentioned that Islamic banking and finance has come up with an equally good response to COVID-19 when we compare this with conventional banking and finance. And I think this is a good enough performance of Islamic banking and finance in this crisis. Now, thank you very much for your perspective, and hopefully we would come back to you with some further questions towards the end of this panel.
Thank you.
Now, we have spent about 15-20 minutes into this panel, and I would not like to make it as dry as it sounds. So I would like to, before I ask my next question from a brother, Ijlal Ahmed Alvi, I would like to ask him on a personal note, because Brother Ijlal, you were not in any rehearsals or in any technical logins. So I would like to ask you, if in 1 minute you could share with us, how are you dealing with your personal, family, and social life in the context of COVID-19?
Assalamu alaikum wa rahmatullahi wa barakatuh. And yes, somehow I was there, but I could not really join the testing times. So my apologies for that, but I was following. And alhamdulillah, we are dealing here, this pandemic in the best way possible, while, mostly working from home. And plus, we are trying our best to continue our efforts in terms of making, Islamic services industry better, in terms of, working on the standards and some other aspects. So, in all, alhamdulillah, we are all okay, and we are, just waiting. So this, pandemic, is over, and then we restart. Although there will be, as being said earlier, will be, challenges, will be, different ways, maybe perhaps, which we have to tackle.
Oh, thank you. I'm very happy to learn that you're doing very well, and all of us, alhamdulillah, we are doing well on a personal level, and we should be thankful to Allah subhanahu wa ta'ala for that. Now, my question to you would be around this Sukuk report, which you have been publishing rather successfully for quite a few years now. Now, given this pandemic, don't you think this is the right time for issuing a global Waqf Sukuk by asking the members of the OIC or Islamic Development Bank to contribute capital to it? Of Maqasid al-Sharia, which are very much in line with the Sustainable Development Goals as developed and propagated by United Nations Development Program. And of course, because one of our focuses in this panel is on profit loss sharing, so this global Waqf Sukuk can be used to the idea of share economy. Now, if this is a good idea, I don't know, you might say that this is a bad idea, but if this is a good idea, where we can start it?
Once again, Bismillah ar-Rahman ar-Rahim. Yes, as regard to our report, naturally we are working on it, and as we always publish, so it gives us good sort of direction in terms of what has been happening in terms of issuance, how the structures worked. We mentioned about, over-reliance on Muraba, which Dr. Bello rightly mentioned. So from that report, our aim is to more see what has, how the issuance level has been, what kind of, is there anything new which has emerged, which can also support the industry. So our report aim is in that direction. So it's more covering in those. Of course, now, we have to little sort of change it in a way that, how after post-COVID, how the situation of the Sukuk market will be. I will be, like you mentioned, will be covering on the Sukuk only. So this is something which we need to sort of put down in an analysis, what we are seeing at the moment in terms of, how the Sukuk market will behave. So we are not really able to sort of put down, until things become clear, but we will sort of put down that, the market should expect changes, once post-COVID. I just want to give a very brief sort of, what has happened in 2019, just people to see it has been a good year. And our report will, confirm that in terms of 2019's issuances. We had record issuances from domestic and international issuers. We had, a good sort of in terms of early 2020, in January, we had a Formosa Sukuk, which has been good in terms from Taiwan. So that's something which is bringing, a new aspect into Islamic finance. And we are also looking at, Egypt finally entering from the corporate sector. So overall, what we saw till February, things were, looking quite positive. Since then, naturally, now what we see is the market, has sort of, in some cases stand still, at least the international Sukuk issuances. What we see now is more of a domestic, sovereign. If you see, 2008 financial crisis, I think this event is bigger, definitely. But if you see, those are sort of times when the corporates start really struggling. And it's always natural, the corporate, the way, they sort of, have to deal with the financial crisis when it happens. And this is something which we are now seeing in terms of certain international corporate basically are going into, again, we have to see, unfortunately, the cycle of restructuring and default. We have some precedents there in terms of, how to deal with that, but this is something which has become a reality. We also have seen, in terms of, how the sovereign probably to meet their fiscal deficits will be probably issuing. We have seen already, issuances coming in from various countries, including Pakistan and GCC and other countries, Indonesia as well. And then we have, issuances from, Africa has been active. And short-term market also, naturally these are more from the ILM. They have some international Sukuk, but overall, it's more domestic. What we also, I think, would like to sort of briefly mention before I move to the point of, Waqf type of Sukuk, which we do have some sort of insight, and we also had a good, article by Dr. Salman of IRTI in our report, in an earlier reports on this subject. So that was very helpful because there has been sort of an element of research which we have to bring in this subject. I think one of the things which we need to sort of see, which we see a lot in terms of, the way the Sukuks are being issued. So Sukuks are issued on the beneficial sort of ownership basis. And we have to see, also another element of, the law reforms which are taking Islamic finance. So when you have a beneficial ownership, naturally it is more to do with your basically, common laws, jurisdictions, which Malaysia is one of the key common law jurisdiction, apart from, English law and others. And then we have, a civil law, which basically is more tilted towards the title transfer. And I think we have seen, in terms of Sukuks, it's almost all of them are on the beneficial ownership. Sometimes it is challenging, especially for sovereigns, to title transfer their, assets. So we have challenges, we have legal, and I think what we have to further improve. And then we have to see now, so we have, in terms of beneficial ownership, more credit risk, which is being taken into account, and we see that, impacting the corporate sector. And then you have, the issue of, asset risk, which is, asset which the quality is key. And this environment now, I think this is something which we have to see how to basically improve, the Sukuk from bringing it more sort of asset back. But I don't think so personally that asset back will basically, could be a major game changer. Given that, it all depends, what type of, law you have, what type of assets you are bringing, whether the, the investor sort of appetite is there to take that risk, although we would like to have that risk sharing. So this is something which we have to keep in mind when we are structuring the Sukuk. If you look at from the point of view of Waqf, I think it's a good idea. And I would sort of support the view which was presented by Dr. Salman also, is that we basically look at the project finance. These are long-term, sort of projects. It could be socially driven. projects. We have, in OECD countries, a lot of need for, clean water or energy. So these are sort of things which probably one can do, and long-term sukuk. And you bring basically, waqf sukuk, created by, a waqf to. So I hope it is still continuing.
Yes, yes.
All right. So, so you bring in waqf as one of the sort of, catalyst. That's sort of the idea to, provide that financing and then that support basically your private and public sector, financing. So I think that's something which probably is, in my view, we need to look at it and we need to do. I think that is something I think we need to work on it collectively on that basis. Having said that, we have to also, when we sort of start working on this, we have to come up the challenges in terms of, revenue generation and how to pay, the sukuk holders a profit when the, project is still maybe Stresna stage, when there is no real revenue generation. So these kind of things we have to also, look into account. There are a lot of sort of other issues in terms of the regulatory, sometimes, political issues, which one has to really deal with, and probably presence of waqf can probably help that. And then you have to, also look at, in terms of, which we see, like I said earlier, is that with this sort of project financing, you will be moving away from, over-reliance on Murahaba. I think we have what we have seen, and you can see in our report also, that we have on the domestic level, a number of sukuks being issued on basis of, Murahaba, which is, I think the reason could be, credit intensive net and others. So this is something in our view, we have to basically, do away, or at least start working towards, creating less reliance on one particular, structure or one particular contract. From IFM perspective, what we are finally, are looking into is looking at, our sukuk issuance, standards. And as you rightly mentioned, what is the good time? So naturally, we are holding on our sukuk al-ijara documentation for now, which is complete for, for publication. And once our board decides, we will be publishing that one. We are finalizing at the same time, sukuk al-mudaraba. Again, these are sort of helping the industry. So naturally, we will see the timing for that. And the two aspects which we probably, this environment may not be sort of a greater importance, but I think going forward will help in terms of, benchmark rate reforms, which will be happening. And we were about to, organize, event in that respect, to see, what impact will have. Also looking at, the Islamic rate, whether we, that should be also tackled. So these are the things which we are sort of looking into at the moment, which we are trying to help.
Thank you very much, Brother Ijlal. So basically, if I refer to the question, you are saying waqf sukuk is a good idea, and we should identify certain areas for which it has more relevance. In particular, you have mentioned project finance, which is of long-term nature, and a waqf sukuk may be suitable for this kind of projects. And of course, you didn't mention, but a waqf sukuk can be very much relevant in meeting the sustainable development goals. If a general waqf sukuk is issued for the 17 sustainable development goals or 5 maqasid sharia, whatever we want to emphasize on, and later on, certain smaller sukuk based on waqf can be issued for the individual sustainable development goals, like no hunger, zero poverty, etc. And one thing, one message I have got from the answers so far, and from the speech of the Secretary General Umar Mustafa Ansari, that despite this great hit by COVID-19, the business is business as usual in Islamic banking and finance. Okay. So the things are moving. Yes, okay, there have been a lot of considerations of the situation. However, the things are moving, which is, alhamdulillah, a good sign. So thank you very much. We might come back to you with some questions at the end of the panel. Now I go to our brother Khalid Al-Qaib, who has been running Bank Nizwa very successfully for quite a few years now. And my question to him would be related to Bank Nizwa. And this would be, about the impact of COVID-19 on the practice of the bank. Has COVID-19 affected you as Bank Nizwa adversely? And do you think that the impact would have been less if you had more PLS-based products in your practice? And do you think that Bank Nizwa would go back to the track quicker than its conventional peers once some kind of normalcy returns to the market? Brother Khalid.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh wa Ramadan Mubarak. Thank you for this opportunity to Aaoifi. And thank you, Professor Humain, for your question. I'd like to take your question in three parts. Maybe the first one will be the impact on Bank Nizwa being part of the banking system. The second on the profit loss sharing contracts and their impact. And finally, inshallah, talking about the recovery stage. Started with the impact on the banking system. As you are aware, and without repeating, COVID-19 impact coming across a global impact, health and financial system. Banking system usually impacted by all these macroeconomical indicators. So we are exposed to that, and we are part, both the conventional as well as the Islamic, we are impacted by COVID. And usually in the banking system, the impacted areas usually mainly will be the liquidity, the asset quality, profitability, and we may add in this situation some kind of operational logistic, which is the way to the bank, e-channels and digitalization. It's coming to be an important point. Just quickly going into that, liquidity, there will be a tight pressure on the liquidity. Banks, they have to be in a liquid position, and they have to put liquidity in the first priority versus any other subject or topic. So liquidity will be the first priority. On the asset quality, I think due to the situation, there will be increase in the cost of the risk, and consequently, there will be impact on the non-performing ratio due to the deterioration of the credit, and there will be impact on the profit and loss, and this is mainly due to the calculation of the IFRS 9 and FAS 30. And this is also a major hit on this situation. Third, the profitability, as you are aware, with this down low demand and the situation, I think the growth will be impacted due to the GDP expectation and the others. So there will be direct impact on reduction in the revenues, and management of any bank should look for diversifying the revenues and look for another alternatives. For example, just to confirm what Mr. Ijlal just said, we are at Bank Nizwa, we moved into investment in Sukuk, and we get some good revenues to absorb any impact on the growth on the pure credit. So the market for Sukuk is actually increasing now, and it's a potential to move with this because of the macroeconomic situation, the interest rate, the big to dollar, and the both for the local and the international. I think this is an opportunity. Also, management of any bank should be able to control the cost-income ratio. Any reduction in revenue should be absorbed by reduction on the cost in order to maintain the impact. And also, I'll switch quickly from that to touch on the particular case of Oman and particular case of Bank Nizwa, saying that here, once we started and witnessed the impact of COVID-19, I think Central Bank of Oman came quickly at the early stage, and with the intervention, they helped the bank to hold control in the situation. And I think it started with the liquidity ease and the capital and other financial relief packages issued by the bank, all that done under the control and supervision of the Central Bank of Oman. And this has honestly helped us a lot to control the situation at early stage. Having said that, coming to Bank Nizwa, I think I just confirm what I just heard from my colleagues here. This is really a test for the Islamic banking to test their resilience and the sustainability and the values and culture. This is what we look at in Bank Nizwa from the board and management. Our strategy in this situation is not a matter of growth or profitability. It's more to support our community. We are witness two kinds of impact due to the COVID-19 on the banking system in Islamic banking in particular. We have a social impact where we have to support the community. Bank Nizwa already pledged amount of around 600,000 Riyal Omani direct donation to the government. The other part will be to absorb the impact of the financial relief deferment of our clients. And we will continue, and the actual impact may be more. We will continue with that. The second, once we started facing the situation, we put the strategy to protect, surface, and assess the impact. To protect our customers, our staff, health-wise, health and safety is a very important, and we made action, precautionary action in this regard. So protect our staff and customers. Then we ensure the continuation of our services. We did not stop. There is no disruption. We continued with that with more focus on these channels, but we continued our services. And the second level to assess the impact and try to reduce and manage. Our aim actually, and this is very important, we believe we are taking a balanced approach because we have stakeholders with the bank. We have shareholders, we have depositors, we have the clients of the credit portfolio, and we have other interests we have to adhere to the regulatory. So I think in this time, the best way is to have a balanced approach to preserve the value of all the stakeholders of the bank. We will not only give financial relief to our clients because of something. We are looking for sustainability to stand next to our clients in retail, in SMEs, in corporate, to actually help them to navigate these challenges at difficult time. And we will be maybe meeting next year with them, and they are passing this difficult situation. So we have to sacrifice on one side in order to maintain the sustainability and in order to test our values, which we strongly believe. This is one side. On the financial side, there is two parts. The first part, which is I talked about the financial relief program. We did deferment not only to the affected clients, but also we went one step further to the low-income clients with 15,000 Riyal Omani and less. We offered them a deferment of their housing in this difficult time. And we will continue giving that kind of support, sitting next to our clients and assist their needs, doing restructuring the schedule whenever is required and what kind of support this is required in this difficult time. And I think the value it will come through the sustainability rather than showing a growth in this situation. So in the other side, on the depositors, also I'll touch in the depositor side along with the second part of the Professor Homaini question on the profit sharing contracts. Actually, I would like to confirm here, I disagree on the profit loss sharing contracts help the bank, or we are seeking more into this because, as mentioned also by Dr. Bello, if you have a look to the financial statements of the banking system at total, and you can check on that, we have a different kind of contracts. We have profit loss sharing contracts like Musharaka or Wakala bil-Istithmar, but we have also lease-based contracts like Ijara and forward Ijara, which usually they have a big portion of the balance sheet, and we have sales-based contracts, which is Murabaha. So if you allocate the three parts or three types of contracts, it will have a good mix on the financials. And this is very important to reduce the concentration, because concentration is one of the major risks in the case of a crisis. You cannot control. So a balanced approach on the balance sheet with a different kind of contracts will, I believe, will give the bank more sustainability and resilience. And on the diversification of the revenues at all, you have equities, you have investment in sukuk, along with the financing, you can have a mix to maintain the yield. And currently, we did not see any kind of capital loss, which actually passed to the depositors. Instead of that, we still actually managing that in an acceptable level when we are taking the impact of the COVID-19 to an acceptable level. This is when it comes into the contracts. Finally, on the strategic, on the recovery stage. I think being part of the banking system, whenever we are, inshallah, seeing soon the things moving into the normality, I think both the conventional as well as Islamic banks, including like this, will be also going faster to that recovery. The most important part maybe today is to keep the access to the banking system through the e-channels, and to maintain this at this time. The engagement with the clients is very important. And finally, I would like to just emphasize something. I think this is a test, as we mentioned, to the Islamic banks to show their values. It's not a matter of getting growth and profitability. It's a matter of preserve the value of the whole stakeholders of the bank. It started from the shareholders, the depositors, the owner of the investment accounts, along with our clients on the financing. So the challenge today, management of banks should be careful when they are deploying the funds of the shareholders, of the depositors, in an acceptable risk, with a mitigation, with an acceptable yield. This can actually give the institution some kind of resilience and ability to absorb the shocks of this actually disaster. And based on that, I think this is the main ideas I want to share at this moment, and inshallah, any further discussion. Thank you.
Thank you very much for very detailed answer. And I would be very brief in summarizing this, that, Bank Nizwa has been affected by COVID-19, but in a positive way. It has become more socially responsible. In the crisis time, any organization, whether this is business organization, charitable organization, they have to show their human side. And Bank Nizwa, like a number of almost all Islamic banks, and of course conventional banks, they have shown that they are socially responsible, and they have come up with a response which is favoring their customers and clients. And this is a good thing. I think this is a new phase of banking, including Islamic banking, in the midst of this crisis. Now, I would ask the same question with a bit of twist. Our brother Shazwani Hussain, who is heading the Islamic banking franchise at Bank Muscat. Now, how COVID-19 has affected Bank Muscat, which is a conventional bank with an Islamic banking window. Do you think that conventional banks have a kind of comparative advantage over Islamic banks to combat crises like this one? And how, as head of Islamic banking within a conventional bank, you are facing some Islamic banking specific issues in the context of COVID-19 crisis? Brother Shazwani.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillah rabbil alamin, wassalatu wassalamu ala ashrafil anbiya wal mursalin wa ala alihi wa sahbihi ajma'in. Thanks very much for the very relevant question, Professor. And thank you to Aaoifi and the organizers for inviting me to this very important conference. Firstly, I must humbly say that given that this crisis is unprecedented, there has been no ready manual for us to refer to, and it has been a steep learning curve within a very short space of time for all of us throughout the financial system, be it banks, standard setting bodies, infrastructure building institutions, Islamic scholars and regulators to quickly adjust and adapt to this new global COVID-19 norm. I will first answer the first part of your question, which is how has COVID-19 impacted Bank Muscat? And in the interest of time, I will also try not to replicate what Brother Khalid has covered from an Islamic banking perspective. Well, I believe as a bank, the challenges faced by Bank Muscat as a result of COVID-19 is quite similar to the challenges faced by any bank globally, as well as our counterparts in Oman, both conventional and Islamic. This includes our responses and reaction to specific and various regulatory guidance, our adjustments to social distancing and safety measures, our agility to offer alternative and workable solutions to meet our customers' banking needs within a scaled-down operational environment, our ability to test our contingency and business recovery methods within an unprecedented circumstances. Now, I'm saying this because I believe no bank has anticipated and included COVID-19 measures into their business recovery plan. And most importantly, our responsibility to put the nation's interest as our highest priority. As a bank with the largest market share and with more than 2 million customers in Oman, Bank Muscat is always perceived as a benchmark in terms of market leadership. Hence, this is where we do carry the accountability of ensuring we provide the appropriate support to the institutions, businesses, and individual clients that are affected by the COVID-19 impact. In the case of Oman, it is worth highlighting that the Central Bank of Oman has issued very clear guidance in terms of how the banking industry should play the role in supporting customers affected by COVID-19, and at the same time avail measures to support the banking industry cope with their own fiscal and liquidity management challenges by relaxing a number of key regulatory ratios, which include firstly, lowering the capital conservation buffer by 50% from 2.5% to 1.25%. Secondly, increasing the lending ratio from 87.5% to 92.5%, and also reducing the repo rate with the central bank by 75 bips to 0.5% to avail cheap liquidity to the larger conventional banking industry, although this repo option is currently not available to the Islamic banks and Islamic banking windows. Coming to the second part of your question, Professor, given that the Islamic banking industry is relatively new compared to conventional, I have always taken the view that for the Islamic banking industry to experience a quantum leap, particularly in terms of growth and operational resilience and capabilities, we should always look at the conventional banking industry as a benchmark, whilst maintaining our strong Sharia DNA. This is where Mithaq, as an Islamic banking window of Bank Muscat, has significantly benefited, particularly in minimizing the impact of COVID-19 by replicating on best practices, technology, processes, operational strength, and the large network of Bank Muscat in dealing with this crisis. For example, to facilitate our customers' needs during this crisis period and to provide uninterrupted banking services, Mithaq's customers, particularly in remote and interior regions of Oman, are able to leverage on more than 160 ATMs as well as cash and check deposit machines across Bank Muscat's branch network, in addition to Mithaq's 20 branches. It is worth mentioning that the prevailing regulatory framework for Islamic banking entities in Oman treats Islamic banking windows more or less as an independent entity, specifically relating to compliance of regulatory ratios. Hence, the challenges faced by Mithaq during this crisis are more industry-based and largely similar to other Islamic banks. So this includes challenges pertaining to product structures, while adhering to regulatory guidance on financing deferments for affected customers, as well as the lack of liquidity management solutions compared to our conventional counterparts. I believe conventional banks, on the other hand, has more flexibility in this regard, especially in terms of restructuring and rescheduling financing facilities and the available tools and solutions for liquidity management, be it from markets as well as facilitated by the regulators. Now, this, I believe, would be common issues in many other jurisdictions across the Islamic markets as well. On the final part of your question, Professor, whether conventional banks have a comparative advantage over Islamic banks, I believe it is debatable to a certain extent and depends on a number of relative comparisons. I'm sure you would agree with me, Professor, that from a larger scheme, factors beyond whether a bank is conventional or Islamic, such as balance sheet size and financial strength, strong capitalization, liquidity and easy access to deposits and funding, credit rating, market penetration, market capitalization, business diversification, geographical spread, size of customer base, shareholder profiles, etc., will be amongst the main prerequisites which will determine a particular bank's resilience to withstand this crisis, especially over the longer term. From a global perspective, with the exception of a few mega Islamic banks, this is where the conventional banks would generally have the advantage in dealing with this crisis. Now, while the Islamic banking windows would naturally benefit from the strength of its conventional sponsors being relatively new and smaller in terms of size and scale vis-a-vis the conventional counterparts, on the other hand, also positions Islamic banks and Islamic banking windows to be more agile and nimble, I would say, to adjust and react to this rapidly changing environment. Hence, I believe what's most important for the Islamic players during this challenging period are for us to perhaps firstly remain supportive and relevant to our customers, and this is where we should operate at the highest ethical standards, to be creative, proactive in finding and creating alternative solutions in collaboration with regulators, scholars, and various stakeholders, of course. Thirdly, to maintain strong level of capital and liquidity, especially over the longer term, because we do not know how long this crisis will actually continue. To work with the larger industry, including the conventional counterparts, especially in overcoming common challenges. And lastly, to be agile and flexible to adjust and adapt new measures, approaches to dealing with this crisis. And this is where I believe leveraging on digital technology and fintech would be a game changer for the Islamic players to close the gap. Thank you, Professor.
I had to unmute myself. No, thank you very much for a very detailed answer. And I have been reminded by the organizers that we are left with very limited time. But the your message was very clear. This is a crisis time, and Islamic banks, as well as conventional banks, they would deal with it based on the strength of their business. And you mentioned that the bigger institutions, okay, whether they are conventional or Islamic, they would be in a better position to meet the challenges of this crisis as compared to the smaller banks and financial institutions. With this, I would like to go to our last panelist, Dr. Mughis Shaukat, who has been very patiently waiting for me to come to him. This is probably going to be one of the most important questions and, of course, the answer. Mughis is, as many of you would know, he has been a proponent of technology in Islamic banking and finance, and of course, in general, he loves technology. And this is one reason that he actually likes COVID-19. COVID-19 has brought technology to the forefront of everything. My children, they are using now these Zoom kind of, and there are so many other social applications, families that are coming together. And of course, myself, I have not been a great fan of technology, but I have started loving it. So in the wake of this greater emphasis on technology and greater use of technology, Mughis, do you think that Islamic banking and finance would be able to adopt more profit loss sharing based products, or the situation would remain unchanged and the dream of so many who have been looking forward to an increase in the usage of profit loss sharing in Islamic banking will remain a dream? I was actually looking at the questions. A lot of questions are about profit loss sharing and its usage in Islamic banking and finance. And a lot of questioners, they have actually shown their disappointment that Islamic banking and finance has failed to use profit loss sharing to a satisfactory level. Mughis.
Bismillahirrahmanirrahim. Assalamu alaikum, dear Dr. Dar and all of the esteemed panelists. Always an honor to be among the greats, thought leaders and influencers in Islamic finance. And you rightly pointed, Dr. Dar, that I am in love with technology and particularly financial technology because it helps me, see in bit of more semblance the adoption of risk sharing aspect, which is also the essence of Islamic finance. Now, you see, but what makes me a little more, although the crisis that we are going through, COVID-19, is not a happy state in any case, but you know, in every crisis there is an opportunity. And I think Islamic finance is being at least third time lucky right now to implement once again its essence, the original essence of risk sharing in Islamic finance. We lost the implementation of its original model when it's rejuvenated in 60s. We lost it again when the financial crisis happened in 2008. Everybody pumped about Islamic finance. It was insulated, blah, blah, blah. But we ended up seeing in 2020 that we're still not seeing the whole wholesome implementation of its essence of risk sharing. And this is why when we were designing this virtual forum, thanks to COVID-19, and gathering all you guys, our main focus behind this was to use this crisis-driven opportunity and rebrand, reassert, reassess the value proposition of Islamic finance, which is nothing but risk sharing. And we thought that through this conference, there is this huge need that has been created, luckily, to rebrand and reassert Islamic finance through its original essence. What we see right now is that the world is now in a twin pain. One is the health disaster, the other is an ensuing economic disaster. We are now living in an age of a new normal where idiosyncratic risks and systemic risks are now very tightly intertwined. Now, what it does is that it allows us to create another new normal by our own selves, where to mitigate these intertwined idiosyncratic and systemic risks that have been caused by this new normal of COVID-19 scenario, we have to create our own new normal by amplifying unity, cohesiveness, collectivity, commonality, with world working as one nation to fight through this age. This is the whole mantra. And if I put it in a Islamic financial jargon, the word unity, cohesiveness, collectivity, working as one nation, commonality, it is nothing to me but synonyms of the very essence called risk sharing. The world right now, through this scenario, is craving for risk sharing, value proposition of Islamic finance. It is such a potent value proposition of Islamic finance that it will not only avoid/absorb any black or even green swan events, but at the same time, it proves itself as an anti-fragile system. Now, when we are, very often, and you and I have been together in a number of global events, and I can recall a few instantly, I think back in Pakistan or Turkey when we were together last time, we've seen a lot of the times that, Islamic finance system is called or referred to as a PLS, or a profit and loss sharing system. This to me is a bit of a worry, because it makes me feel that there is apparent cognitive deficiency or a cognitive dissonance among the stakeholders or participants of Islamic finance, because when they term it as profit and loss sharing, what they're trying to do is they're trying to just defocus its whole fitra from a result orientation or the outcome orientation aspects of it, rather than the model or essence orientation aspect of it. Now, notice something, which is this is very, very fine, thin line between this, and if you're clear, you will know about this, that profit or loss sharing is ex post the risks that you take and share them. Yani, it is ex post risk sharing. So the right way to frame Islamic finance is to call it as a risk sharing focus system rather than a profit and loss sharing focus system. You don't want to define it from its ex post version. You want to define it from its essence, from its model version. The moment you define this from its model version, all of a sudden you would see that even if I want to implement this model version, and I see the folks starting and bashing Islamic, sometimes, poor brother Khalid from Bang Nizwa and Shamzani, you don't want to be in their shoes, because they're not only pressurized by the community as well, the stakeholders, to all of a sudden have a magic wand and come up with a true risk-sharing driven version of Islamic finance into practice. But at the same time, they've been Sharia scrutinized while they have to maintain their numbers end of every year. So it's a very, very tough nut to crack. And sometimes, I feel sad for them, because they're in a hot seat. So what happens over here is, when you start defining Islamic finance from its essence, rather than from its ex-post version, all of a sudden pictures become clear. And once risk sharing becomes clear and you can frame it through risk sharing, then you can see that what sort of challenges the system will face. You see, again, I'm repeating myself, the whole essence, or among the main essence to organize this whole virtual forum was to come up and rebrand Islamic finance and how potent it is through its mechanism or the fitrah of it to fight the situation, the mess that COVID-19 has put the world in. Now, having said that, I want to go very quickly because we are pressing for time. Islamic finance has been and is still sharing a lot of real original challenges. I'm not talking about challenges which sometimes people see as effects and they start terming them as challenges, but I'm talking about challenges that are actual challenges, the causes, not the effects. First challenge for me to implement a COVID-19 needed / risk sharing version of Islamic finance, which the world is waiting for, is to provide Islamic finance a level playing field, folks. I mean, if I want to implement and define Islamic finance from its original model, I have to make sure that the system, if I want to make it operational in the real way, the one that I desire and frame it, I have to have a level playing field for Islamic finance. Currently, there is an edifice of structural, institutional, administrative, fiscal, monetary, legal, what may you not have, that favors debt finance system. There are no, moreover, there are lack of long-term, low-risk and liquid instruments corresponding to long-term treasury bonds or securities of conventional finance. The legal jurisdiction, the arbitration is a problem, and a number of the jurisdictions are still very hostile to Islamic context vis-a-vis their understanding and adaptation. And last but not the least, which is the mother of all the challenges, is the human capital issue. Guess what? Because we have not been able to address and implement Islamic finance, as I said, this is a third time lucky opportunity for Islamic finance to come back to its fitrah and be implemented in the same way. And by the way, it's not me saying that. A few years back, when I was about to move to Oman from Kuala Lumpur, which is virtually a second home for me, there were two very prominent and extremely important declarations that were done. One was called the Kuala Lumpur Declaration, the other was Jeddah Declaration. In summary, these declarations were produced with us, to me, is a status of effective fatwas because a number of influential Sharia scholars vis-a-vis Islamic economists sat together under one roof and deliberated the next version on the next phase of Islamic finance, and they concluded unanimously that the only way Islamic finance can achieve maqasid al-Sharia and fulfill its expectations is when it's actually adopt risk sharing. I'm not saying stop doing debt financing, but what I'm trying to say is that, you know, try and focus a little more on risk sharing. When I say risk sharing, it does not necessarily mean only mudaraba and musharaka. Remember, risk sharing is the main qanun, it's the main law, which can be implemented in different ways. If my need serves me that I'm a trader and I'm a good trader, I can implement the al-bay' qanun through trading activities, and I then employ murabaha, salam, istisna, and whatnot. If I'm a business-oriented investor, I want to adopt al-bay' or risk-sharing fitrah of Islamic finance, and I can do that through the musharaka and the istismar contract. So the Islamic financial system, through its main qanun, has given us so many options as per our suitability to divert this qanun in best possible manner which serves me. So I can use risk sharing, I can use it through istismar. I can use risk sharing, I can use it through tijara. I can use risk sharing, I can use it through ijara. I can use it even through waqf, even through takaful, even through zakat. These are all different modes of performing the same qanun in different needs and different dynamics. Bearing in mind, the current status of Islamic banking is as we all know, over 90% of the global Islamic banking balance sheet is debt-based balance sheet. It's debt-based contracts, murabahas, tawarruk, and all similar derivatives. Again, I'm not against debt products, but what I'm saying is you become a sitting duck for any black swan event to happen. It's just you're too small right now that things do not go as noticed as to the conventional system. But having said that, if, for example, you focus too much on the 90% debt-based, tijara-based al-bay' or tijara-driven al-bay' to murabahas and its derivatives, what you're doing is that you're keeping the overall economy stagnant. It is neither going up nor going down because to do tijara, you first need istismar to produce those products, the mudarabas and musharakas to produce for those products which you can do tijara on through murabahas and its derivatives. Now, whatever mudarabas and musharakas that produced you the goods, you've been now using them, and those goods, nothing new has been created. Those goods have been circulating back and forth. Money has been circulating back and forth. So economy is not growing. Nothing new is coming to the economy because it is less focused on the smart risk sharing or al-bay'a, but more focused on the tijara model of al-bay'a. So what happens is that sooner or later, you will achieve a plateau where the economic graph will start moving in a straight line, neither going up nor going down. However, if crisis or black swan events like the financial crisis or the COVID occurs, the only way is down, by the way. Now, the other thing that you have to notice that there is oil crisis independent of COVID crisis. There is economic crisis. Countries like this beautiful country, Sultanate of Oman, is facing fiscal deficits in huge numbers. So a number of solutions have to be, they can't borrow. I mean, the credit ratings are down, the cost of borrowing extremely high, debt to GDP ratio is historically high. When I first came to Oman, I thought that it's such a safe country economically because at that time in 2014, debt to GDP was 10% to GDP. Now it's almost 60%. So these are serious, serious strains. So one way that perhaps we can use this COVID opportunity vis-a-vis the oil crisis opportunity, as well as the economic overall condition opportunity in countries like Oman and other similar countries in GCC and outside. We've just talked about the Waqf Sukuk. It's a beautiful idea, fantastic idea. But having said that, please bear in mind the risk sharing or al-bay'a practice through the Waqf mode is a category that is under the wealth redistribution modes of Islamic finance. It's not wealth creation. It's not a direct mode. It's an indirect mode. You use Waqf to redistribute wealth. You do not use contracts or instruments like Waqf to straight away directly create wealth, like so many other products that you have. Now, while a sukuk on Waqf is a beautiful idea, must be implemented, and there is a session, next session on social finance where it can be extremely relevant discussion, I would go to an extent where you use a sukuk musharaka, which is not a normal sukuk musharaka, but it's a public and private partnership oriented sukuk musharaka, where the government and the society becomes musharak in that sukuk, and then together they grow the economy. Together they come out of this mess, join forces, join hands and stuff like that. Now, potential of these sukuks are many. Guess what? While we are discussing this just few weeks ago, and while I'm discussing, I'm sharing a link. I'm sharing this wonderful link in this Q&A that we have, or in the group chat that we have. I'm sharing this link to everybody right now. There is this huge discussion going on in Europe where they're actually talking about exactly risk-sharing equity-based sukuk musharaka, which I've just mentioned right now. Europe is moving towards that solution where Europe, or the countries of Europe and the people of Europe, will, in this age of COVID-19, will join hands together and will create a common fund to facilitate the growth of the economy in this scenario. This is very reminiscent to what Misak has done.
Intervene. Okay, this is actually we have reached the end of this session.
Fine.
Can you just in last one sentence summarize?
Yeah, so Misak has done such a sukuk, beautiful sukuk, but you see, this is why I'm a huge fan of the financial technology, because financial technology is adopting the 101 modes of mudaraba and musharaka or risk-sharing finance in a much cheaper, much more user-friendly way. The crowdfunding, the angel investing, they are beautiful examples of how financial technology or fintech is trying to serve the actual mandate of Islamic finance, which unfortunately it is yet to serve. Big techs are coming. There's a huge session coming on technology where we'll be discussing big tech. I think the solution for post-COVID-19 version of Islamic finance, which I call version 2.0, technology-driven, is when Islamic finance can create a synergy or association with these big tech firms, the Googles, the Facebooks, when they are coming to finance. This, I think, will serve Islamic finance version 2020 or post-COVID-19 onwards. Thank you very much.
Thank you very much, Mughis. Okay, I know that you had a lot to share, but unfortunately, we are limited by time. The message is very clear. Okay, profit loss sharing is one aspect, but more important is risk sharing. And the risk sharing actually can be done with the help of ijara-based financing, with the help of trade-based financing, and with the help of so many other products being used by Islamic banks. And the emphasis on profit loss sharing in a way is exaggerated. Islamic banks, if they implement more of risk sharing by way of the products they're already offering, that could be a certain improvement in the practice of Islamic banking and finance. Now, we have a number of questions. I think when I was browsing the questions, there are over 100 questions. And unfortunately, we will not be able to pick all those 100 questions. As I said in the beginning, we would be picking up a couple of questions. The first question actually happens to be for our brother, Dr. Bello Lawal Danbetta. And the question is, the person has referred to this recent standard by Islamic Financial Services Board. It says this recent standard has provisioning for profit loss sharing contract by a bank with a trading partner as zero. So provisioning requirement for profit sharing contract by a bank with a trading partner is zero, while for with a non-trading partner is 400%. And the question is, isn't this going to adversely affect the adoption of profit loss sharing by banks? You have to unmute yourself first.
All right. Thank you very much. I mean, maybe the person did not really properly look at the standard and get to understand the risk weight that is being assigned for Musharaka and Mudaraba contracts as well. Because when you are dealing with someone that is dependent on whether it is being guaranteed by another central bank, or maybe it has some strong backing, or it is an instrument that is being issued by the government, where will you have a risk weight? Because the government have no risk in a sense, all right? But where you are dealing with somebody, an external or third party, so in that case, the risk is quite, you are exposed, and there is the level of exposure is very much higher. So that's why the risk weight has been assigned to such a level that to mitigate the bank from having more an extraordinary exposure. So I mean, that's what I can say for now, but I think it depends on who you are dealing with. That's how the level of exposure is, and that's how the risk weights are being assigned for every transaction that is being classified for the capital adequacy standard.
Thank you very much for a brief but very comprehensive answer. Now, my next question, not my question, it's actually asked by someone called Mariawati Binti Umar. And this is addressed to Brother Shamzani. The question is, as mentioned, banks have the options to reschedule and restructure their financing portfolio. Can you share its implications to the legal documentations, in particular for Islamic banks? Brother Shamzani.
Yeah, thank you very much, Professor. Good question. There are various, as per what we are doing here in Oman, in regards to the deferments when it involves restructuring and rescheduling. Obviously, there will have to be, what do you call, rescheduling agreement that needs to be signed with the clients, and that is what we are practicing here, with our customers, Mithaq's customers. And again, as I mentioned, this is unprecedented. So, what we're doing is, first we actually take the guidance from the regulator, as our main manual, and then of course, the directive and guidance from our scholars in terms of how do we deal with this what you call changes in terms of legal documentation, and obviously everything needs to be transparent with the clients, and in terms of providing the schedules, that's also a must in terms of what we do. Again, it depends on product by product, and that's how we actually manage it.
So thank you very much. As I said, we have a lot of other questions, but we have been reminded by the organizers that this is the time to close. However, I would like to request our panelists to share in 1 or 2 sentences, one by one, what would be the new normal for Islamic banking and finance post COVID-19? And I would start with Dr. Samia Swalem.
Thank you, Professor Dar. It has been said the best way to predict the future is to create it. So I think we should start working on creating the future. And I would say that we should diversify the Islamic financial industry. Throughout the discussion, all comments were about banks, Islamic banks, as if Islamic banks, they are able to do everything, which is not true. Islamic banks, they cannot be venture capital. Islamic banks cannot be charity organizations. Islamic bank cannot be Aaoifi institutions. They are just banks. They have to do their job properly. So I would say in one sentence, the future is diversity. Thank you.
Thank you very much. Dr. Bello Lawal Danbata, your couple of sentences on new normal of Islamic banking and finance.
Thank you very much. I believe the new normal is one, embracing technology. And I agree with the points of Dr. Sami that diversification is essential. It's very, very crucial. But at the same time, going back to the originality, in a way that coming up with a new model that's really embraced the ethics and the maqasid of Sharia is really essential as part of the diversification. As at the same time, the regulators are strongly encouraged to, support the banks, but at the same time be mindful of relaxing too much of the regulation that will affect the stability of the industry. That's a new normal. So living with the challenge at the same time, ensuring the resilience and stability of the industry is crucial to the sustainability of Islamic banking and finance as well. Thank you.
Thank you very much. Brother Ijlal.
Yes, my point would be also working collectively. Also, I think that's the crucial thing. Diversification is one aspect especially, and also looking at identifying where risk sharing is possible, because in certain cases at the moment it might not be possible given the size of the industry. And finally, I would like to we all are praying that things normalize and we return to normal and we go back to our masajid and can pray with Jama. I think that's something this Ramadan is teaching us something differently, and we pray what we're learning now can enhance our iman and also also working for the betterment of the industry, inshallah.
Very well said. Brother Khalid.
Yes, actually, I'll quote from my colleagues. I think technology and diversification will be the trend. But all should be based on the values and the Sharia compliant. We should always remember our values to keep the sustainability, inshallah.
That's right. Thank you very much. Brother Shamzani. You have to unmute.
What I would say is we need to be creative, proactive in finding creative alternative solutions in collaboration with the various stakeholders, and also to be agile and flexible to adjust and adapt to new measures and approaches.
Thank you. Thank you very much. Movies?
Yeah, so I think the new normal would be to focus on creating and producing more believers and visionaries in Islamic finance, technology adoption, and for regulators and standard setters to be a little more braver and more open towards this new age of Islamic finance vis-a-vis their role. Don't expect everything from bankers.
Thank you very much. Our viewers from around the world, as I said, more than 2,500 people registered, and a vast majority of them are actually logged in right now. I enjoyed this session very much, and I'm extremely thankful to our 6 panelists who shared their views in this very limited time period in a very impressive way. This has been a successful experiment in Islamic banking and finance.
I think there's a lag at Dr. Humayun's.
Rizwan, if you could see.
I think
conclude the session, please.
Jazakallah khair. I think we're having a technology deficiency just at the time when he was going to appreciate it. Subhanallah, it comes at right at the time. But I would like to, on behalf of Professor Humayun, the session chair, as well as on behalf of the organizers, I would like to first thank him for chairing the session in an excellent manner, and thank you, the fellow panelists, for sharing your expert opinions. I surely believe it was a very enlightening session. Thank you, Dr. Sami, for your time. Thank you, Dr. Bello. Thank you, Brother Khalid. Thank you, Brother Ijlal. Thank you, Brother Shamzani, and Brother Mughis, for sparing the time. I think it was truly an enlightening session. For the attendees, we're sorry that the time was not enough, but hope that the discussion here, then the questions that were raised will be answered in due time. This further shows that there's a lot of unclarity looking at the questions that are coming through from that the industry is going through in this new normal world. I would have loved to summarize the discussion points from all the fellow panelists for the benefit of all. However, time does not permit it. The emphasis from the power of ideas has more impact from Dr. Sami Sualam, to the demonstration of value addition in terms of resilience by Dr. Bello, and from moving on from Waqf Sukuk idea by Mr. Ijlal Alwi, and a balanced approach looking from bankers, from Mr. Khalid and Brother Shamzani, and using the technology in advancing the risk sharing modes. It was very intellectually stimulating, and I hope it was a very engaging session. I trust you all benefited from it. I certainly did benefit. So I would like to, on behalf of everyone, I'd like to thank the fellow panelists, the session chair, for your time. We hope we can have you around again soon, inshallah. Wa jazakallah khair. Now, in the interest of time, I would like to quickly move on to the next session. However, before that, I would like to announce the poll results. It was incredible in terms of the results that we had. You will surely soon see the results on your screen. It's very incidentally, about 100% of the people in attendance voted for it, which was incredible and personally very interesting. And about 50% of the people who voted, which is 50% of the people in attendance, voted that it was the regulatory authorities and the central standard setting bodies that needs to lead in terms of an enhanced risk sharing model for the Islamic finance industry during and post-COVID world. And I would certainly agree with all the panelists, or most of them, who said that it has to be all the different stakeholders coming together and working to steer the industry forward, and all of them have to come together. So all the banks, all the regulatory authorities, the research and educational institutions, multilateral organizations like Islamic Development Bank, which is already doing a very impressive work. The Waqf institutions, the social finance institutions need to come together and play an important role in the post-COVID world to make sure that we steer forward this industry in a meaningful manner. Now, on to the next session. But before we move on to the next session, it is time for the one and the only special address, which will be delivered by Dr. Hussain Muhyiddin Qadri, who is a deputy chairman of the Board of Governors at Minhaj University, Lahore, Pakistan, and an associate professor at the School of Economics and Finance at Minhaj University. He's also president of Minhaj al-Quran International, chairman of Minhaj Education Society, which runs more than 650 schools and colleges throughout Pakistan. He's the chairman of Aaoifi Orphan Care Homes and Al-Muwaqat Islamic Microfinance and Minhaj Halal Certification Pakistan. He is affiliated with the University of Melbourne, Australia, for a number of years as an honorary fellow. Dr. Qadri is also an author to more than 30 books and has written more than 50 research articles, and is a well-known, reputed international speaker. His special address will be on zakat and microfinance, a novel way towards alleviation of poverty in Pakistan. Now, before any further ado, let me invite Dr. Hussain to share his special address with the audience. Dr. Hussain, the stage is yours.